Hi and welcome to Sdiptech's Webcast. Jakob Holm, who is the CEO, and Bengt Leijström, the CFO of Sdiptech, will be presenting today. My name is Martin Westerlund and I'm from Finwire.tv. If you have any questions to Jakob and Bengt, you can ask them in the form on our website that is located to the right. And if you're watching this on YouTube, you can find that form in the description. With that said, I'll give Jakob and Bengt the stage.
Thank you very much and very welcome everybody. We have invited to this webcast in specific relation to the 3 deals that we did on Friday. Bengt is with me as always, but even more important, also Fredrik Navjord, who is our business area manager for water and energy, to which the recent acquisition Rolex will be included. So Fredrik is here to introduce the company to you. Okay, so we will run through summary of the deals that were done on Friday, and then Fredrik will introduce Rolex Services Limited to you all. And then finally, we will walk through the impact that all of these 3 deals have on Sdiptech going forward. Okay, so on Friday, we concluded 3 deals, 2 divestments and 1 acquisition. We divested Tello Services, a company focused on roof renovation and roof safety, a local services business in the Stockholm region. Tello has been part of Sdiptech business area PTS, and that also goes for the Swedish elevator businesses that we also divested. The Swedish elevator businesses have been in Sdiptech Group as 4 separate business units, so we sold them as a group. The divestment to Tello was done to Fasadgruppen, and the elevator businesses were divested to ThyssenKrupp Elevators. Regarding the divestment of the elevator businesses, that is pending a permission from the Swedish Competition Authority, which we expect to have in April. We don't foresee any problems with that. It's just a formality that needs to be passed through. And then the acquisition of Rolex, we will move into it in more detail, but it is a company that is focused on charging equipment, and it has a fantastic history, 30 years of experience from charging equipment and charging solutions to marinas and to camping parks. And it has taken that experience into the electrical vehicle market 10 years ago, sorry, that has given them a head start there. One natural question that comes is, of course, why are you divesting? That is right. That's a good question. Our business model is to acquire companies, to build a group, and add one divestment after the other to create a growing group of companies. However, divestment in these 2 cases makes sense to us. The business area Property Technical Services is a stable business area. The companies Tello and the Swedish elevator businesses, they are also stable on sales and also stable on margins. However, we haven't done any acquisitions in this business area for over the past 3.5 years, and our focus is and has been over the past 3 years to put our growth efforts on the other 2 business areas, water and energy, especially infrastructure solutions. Our long-term goal is to create sustainable growth within critical needs
within infrastructure. So we have the set direction on our business areas, water and energy, especially infrastructure solutions. So there's no change in our strategy. It's really just a logical consequence of our focus area. And then with that said, we will then move forward then to Rolex and to Fredrik. Please go ahead.
Thank you very much, Jacob. First of all, I would like to say that we are very happy to introduce Rolex today. It's a great company we've had on our radar for over a year and a half. We are now proud to call it a Sdiptech company. Rolex revenue for 2020 was approximately 265 million Swedish crowns with an Ebit of 18 million, adding up to an Ebit margin of roughly 30%. The company has 155 employees working within their 3 business areas: electrical vehicle charging, marine, and leisure. And leisure is primarily aimed at caravan parks. Rolex was established in 1990 and specializes in developing, manufacturing, and installing electrical charging products for the electrical vehicle, marine, and leisure industry. The company's 30-plus years experience in supplying highly durable products to the demanding marine and leisure segments has enabled them to build a strong reputation in the UK as a supplier of high quality charging infrastructure. In addition to their experience in hardware, Rolex also has a fully integrated software backend solution for their respective market segments. This means future-proofing their products and providing their customers with a complete solution. Their experience, long-standing reputation of making quality products, and their established network of distributors and installers enable them to quickly take position in the expanding EV charging market. And for the past 10 years, Rolex has built an installed base of over 200,000 EV charging units. And this makes Rolex one of the largest independent EV charging equipment manufacturers in the UK. The company has its headquarters in Boston, UK, where the 2 manufacturing facilities and the main office are located. So Rolex targets both the B2B and B2C segments. B2B is Rolex's main focus area. The level of product complexity is higher here, and Rolex can utilize its vast experience in developing turnkey charging solutions for demanding applications. The majority of sales is done through wholesaler distributors, where they have over 2,000 wholesale points and over 1,500 billed merchants. And in addition, their own direct sales organization, targeting primarily private networks and fleets. For the consumer segment, Rolex utilizes their own online sales channel, EV One Stop. This is an online website primarily focused on the EV charging market in the UK. EV One Stop offers an alternate route to market, enabling Rolex to access end consumers directly. It's currently run as an independent company, but only sells Rolex EV products, and Sdiptech has bought 100% of both companies. Through these combined market channels, Rolex's product range has the potential to reach over 250,000 electrical contractors in the UK. Rolex has a strong sales channel structure, where, as just previously mentioned, the EV charging segment is sold through wholesalers and via direct sales, and for consumers through EV One Stop. The marina sales is conducted through a global network of over 40 sales agents and via direct sales. And the leisure segment is served via direct sales and through their wholesaler network. They have a very comprehensive range of products for both EV charging stations, marina, and leisure. And this is something that keeps coming up as a key strength when talking to wholesaler customers, that Rolex product range fulfills almost every application. So in combination with their software backend solution, the end customers have a one-stop shop that fulfills the majority of their needs. The EV charging market can roughly be divided into 2 segments. We have the private networks, which is domestic, but also mostly workplace, commercial, and fleet installations, as opposed to the public network, which is publicly accessible EV chargers, such as roadside charging and the equivalent of charging gas stations. And as you probably know, if you follow Sdiptech, we like companies with a strong focus. And Rolex has a very good position on the private network segment. Private networks, and especially workplace, shopping center, private fleets, etc., place a very high demands on the supplier in terms of product quality, support, high quality backend solutions, and access to installers, etc. As opposed to private charging points at home, which is in many cases are very basic. The private network installations are complex by nature and places high demand on technical know-how on the installer. And this creates a barrier for new entrants to establish a strong position. And here Rolex really can leverage his 30+ experience in the business. So looking at the underlying market drivers of EV and Rolex, I'm sure that it doesn't come as a surprise to anyone that we are in the beginning of a strong global megatrend connected to electrification that will provide a stable underlying market growth for the foreseeable future. The private network segment is expected to comprise 95% of the charging infrastructure. And as previously mentioned, within this segment is where Rolex has a very strong position. Business to business, private networks, and complex installations. Electrification will continue to provide opportunities as markets mature. And one such example is, for instance, solar to EV charging. And here Rolex will be releasing a new product during 2021, solar EV. I think the main message for this slide is actually to show the breadth and the knowledge that they accumulated over the past 30 years, from starting in the leisure industry, caravan park hookups and marina in 1990. Just 5 years later, establishing a great back-end solution for marinas and caravan park hookups to get the whole segment and really giving the customer a good end-to-end solution. And over the years, establishing wall pot products for the EV side, EV one-stop to online sales, and also getting the online sales up and running with great back-end solutions. And we're looking forward to 2021 and forward with new innovative products coming out from a company. So one of the aspects that we really love about Rolex is the level of customer satisfaction that they have. And for those of you that have followed Sdiptech for a while, it comes as no surprise that we really try to get to know the companies before we do an acquisition. And in terms of Rolex, this has been a very pleasant experience. As you can see from just some of the customer feedback we got during the due diligence, Rolex product quality, product range, sales and support organization are second to none. And this provides good barriers to entry against competitors in the B2B private network segment. And these are the type of companies that we're really proud to bring into Sdiptech. So I'm sure you're all reading already, but I think some of these quotes are quite impressive. That for 400,000 pound sales, one supplier did not have a single product being returned. They have a product range that fulfills almost every application for the customers, and it's for some of these, it's the only one they sell. It's the only one they try to market because they know they can count on them. So in terms of Sdiptech fit, I would say that Rolex fits all our criteria. It contributes to creating more sustainable, efficient, and safe societies, delivers solutions to critical needs of the infrastructure sector. The company has strong historic profit performance and very stable cash flows. And it has a unique value proposition and a very robust business model, looking at all of their three segments combined. So in summary, Rolex is the 14th business unit within water and energy, and it's the 8th business unit we acquired in the UK. Sales, as previously mentioned, is 265 million Swedish crowns with an EBIT of 80 and a profit margin of approximately 30. Our expected EBIT margin going forward is about 28%, and the expected growth combined for EV, marine, and leisure is between 12 and 15%. And with that, I would like to hand over back to Jacob. Thank you very much.
Thank you, Fredrik. To sum it up, to have a look at the impact then on Sdiptech as a group, since we're divesting and acquiring at the same time, we would like to share some more details around the impact of each deal. So starting off by the acquisition, the multiple that we paid was slightly above 9 times operating profit. And we're quite happy then to also present that the multiple for the divestments, the blended multiple was higher than that, around 11. Then moving over to the profit side, Rolex is about 3 times the size of the divested units, 80 million in Ebit compared to 27. And the margin also has a positive impact on the group, contributing expected then 28% going forward compared to approximately 8% for the divested units as a blended margin. So all in all, we're very happy to have the opportunity to present these things at the same time. And all of this combined going forward, we raise our guidance to 19 to 20% operating profitability going forward in 2021. And I also would like to make an extra note then on the divestments that we did. A natural question would be, okay, so now you have divested some of the business units. Will you continue to divest going forward? And first of all, I really would like to be very clear that we are proud of all our business units within Property Technical Services. We know the company very well. We know the management very well. They're performing very good. And we are in absolutely no rush at all. We are the owners of the companies that still are in PTS. We will always take care of them. And if it might be come up as a question for a further divestment, we will only do that if the price is good and attractive, and also that we can ensure that the new homes or new owners for our companies are the best possible. So that was an important message as well to all of you. With that said, I think we open up for questions.
Thank you. And like you said, now it's time for the Q&A. And if you have any questions, you can ask them in a form on our website, and I'll ask them if time allows. And if you're watching this afterwards, or that we don't have time to answer your questions, I'll make sure to send them to Sdiptech. And the first question is, why do you expect Rolex Ebit margin to decline over time?
Okay, well, we don't expect it to decline over time. We just want to send the right expectations going forward, and the expectations should be at 28% going forward.
Thank you for that answer. And the next question is, does this acquisition have any long-term competitive advantage?
Yes, it is for sure that the electrical vehicle market is of course a fast-growing market, and it will continue to be so. It will attract many new companies and players, and eventually all of those fast-growing markets, they come to a point in time when the market is consolidated and there's a margin pressure. So that is something that we have focused a lot when we had a look at the company in the beginning, but also during our due diligence and all the discussions with the management of Rolex. And there are 3 clear or distinct niches that we believe are sustainable going forward, and also in the future during consolidation period. The first 2 are their legacy and region. One being charging solutions for marinas, and the other one being charging solutions for caravan parks. They've done this for 30 years, and it's a very clear, distinct niches that they are in. And then when coming over to the electrical vehicle side, which is of course very attractive, we believe that the long-term position is really to continue based on the strengths that Rolex already has, and that is, as Fredrik described, towards private networks as opposed to public charging points as gas stations in between quote marks. Those are the public. So we believe in private, There the solutions typically that Rolex is strong is towards the business to business segment, where also the demands are higher. The solutions are more complex, and Rolex competency comes into play in the best possible way, and also the combination then between the excellent hardware, but also then the important back-end software solution that is key for complex private installations. So the long-term position is within business to business complex private installations.
Thank you for that answer. And the next question is, what is Rolex split between EV, Marine and Carvana in terms of sales?
Yes, we have disclosed the numbers that we have decided that we want to disclose, and the exact split between the segments and how they are characterized. We haven't disclosed those at this point in time.
Thank you. And what is the market structure in terms of market shares for Rolex?
Let me see if we understand the question. The market structure for market shares?
Yes, correct.
So it's the competitive landscape, I guess, that this question is about. And okay, all right. So, well, I hand over for a brief comment from Frederick here.
Yeah, and as we tried to describe, it's a complex network since the market is fragmented. But as we mentioned, without any specific percentages, Rolex is one of the largest independent EV suppliers in the UK. So their market share in the segment they want is double digits percentage-wise at least.
Okay, thank you. And how does this acquisition impact your ability to do more acquisitions later this year?
Well, it's Bengt here. Well, we have financed this acquisition with our own cash and also additional bank credit facilities. And as always, we have calibrated our balance sheet against our pace of acquisition. So this does not change anything when it comes to our target to acquire the 90 million per year. You could say now, well, you have acquired the 80 million and then you're almost finished, but we don't see it that way. We have also sold out some profit. So, but we will continue as always with the acquisition path going forward.
Okay, thank you. And in a post-pandemic world, what are the prospects of Rolex?
Well, the trends for electrification in society is very, very strong, and it's a long-term trend that I think everyone understands. So the prospects are good.
Okay, and how fast is the underlying market of Rolex growing?
Well, so there are three different markets: marinas, caravan parks, and electric vehicles. And the combined growth, taking into account the respective sizes of Rolex divisions, the blended combined growth, we expect to be between 12 to 15%.
Okay, thank you very much, and thank you to all you who have followed this webcast today. I hope that we see each other soon again. Bye-bye.
Thank you for listening.